Few years ago, when gold was trading somewhere around 30,000, that is when I had bought this bracelet. Today, if I were to sell the same bracelet, then I'm sure I would be easily getting a potential capital gain of at least 30%. Mom, shall I sell it? Hi guys, here Rachana Ranade here, and I welcome you all to my Wednesday's lecture. Whatever question I asked in the beginning of this section, please don't try it at home. It can be injurious for your health. You saw what happened with me, right? Simple reason is that we Indians do have a special attachment with gold, and especially it does happen in majority of the household that if you ask that should we sell physical gold, then an overall understanding is that something has terribly gone wrong with that family. That family is in a terrible financial need, and that is the reason why they have to sell off their gold. That is how gold is looked at in a traditional Indian family, right? So investment in gold is not a bad idea at all. It is a very good way to diversify your portfolio. But then how to detach ourselves from gold is the big question. And for that, the answer is buying gold in the e-format rather than buying it in the physical format. And how to buy e-gold, what is an option which is available through the sovereign gold bonds which are currently being issued, who has issued it. So many questions in our mind. We are going to tackle them one by one in the entire video. Okay, first, let's start off with the very basic meaning, sovereign gold bond. Okay, what is the meaning of sovereign? Sovereign means a ruler. In our example, ruler is like Government of India. Okay, so who is issuing it? It is actually being issued by RBI, but RBI is issuing it on behalf of Government of India. First point, very clear. So is it safe? Obviously, it's Government of India who is issuing it. So there's no question of default as such, right? Number one. Number two, should we be really investing in gold? Because it's a gold bond that we are investing in. What if there is no appreciation in the coming years? So for that, let us try to check the track record, what has happened in the past few years, right? So if you check out on the screen, here you can see that gold, which was trading around 26,343 levels, somewhere around 2015, has gone up to 42,300 levels in the year 2020. So if you check out on an average, CAGR here comes out to 37%. That is the return gold has given. In fact, if you check the last 10 years, then out of these 10 years, for a period of 7 years, gold has given a positive return. So don't be under the impression that investing in gold is a useless idea. Not at all. In fact, I will definitely say that if you were to diversify your portfolio, I do see this as a very good opportunity for you all. Again, I'm repeating, not only from a growth perspective, from a returns perspective, but also from the perspective of diversification of portfolio. So now question is that, yes, past returns were on an average CAGR 37%. But what about returns in the coming years? How much will you get, or how much can we expect in the coming years? We are not talking about capital gains right now. Let's understand a fixed component of return that you are going to get, hook or crook, whatever is the gold price. Okay, you're going to get an assured return of 2.5% annually. Okay, it's annual 2.5%, but which will be paid out to your account on a semi-annual basis. Okay, in simple words, 6 monthly basis, you're going to get this interest on gold bond at a rate of 2.5%. Just to give you a very simple example, if the nominal value or if the face value were to be 100 rupees, then 2.5 rupees would be your interest. That would be split as rupees 1.25 and 1.25 to be paid in 2 slots, one after 6 months, the other 1.25 after another 6 months, right? As simple as that. Are we talking about gold appreciation in this point? No. This is a gold bond. Bond is like a debt instrument. It's like a fixed instrument. Okay, I mean fixed return bearing instrument. So here we are not talking about capital appreciation as of now. We are talking only about a fixed return that you are going to get come what may. And how much is that? 2.5%. Very important. It is going to be paid semi-annually, 6 months, 6 months. Total is 2.5%, and very important, this is simple interest and not compound interest that you are going to get on this investment. Okay, in the previous section, I said that let's assume that the face value of bond is 100. Okay, but that was just an assumption. Let's understand what is the actual face value of the bond. It is 4,677 rupees per gram. Okay, but very important, if you are buying this sovereign gold bond SGB at through an online platform, okay, then you're going to get a 50 rupees discount per gram. So now the revised purchase price per gram will come out to 4,627 rupees. Okay, you're going to get interest at the rate of what? 2.5%. But question is 2.5% of what? 4627 or 4677? You're going to get it 2.5% of 4677 rupees, because that is the nominal value. Okay, now if you calculate this 2.5%, it comes roughly around 116 rupees annually. Okay, 116 annually, you're going to get it biannually, so roughly 58 rupees roughly. That will come out to a 6 months interest rate. Okay, interest amount, but only if you are buying. This is entire calculation I told you was for 1 gram of gold. Okay, what about this interest? 116 rupees per gram interest that I'm going to get, is that taxable? Yes, that is taxable. Okay, so interest taxability is clear, but what about capital gain? So let's understand. I bought, let us say, 1 gram of this sovereign gold bond. So basically 1 unit, I will say 1 unit of, because buying 1 gram of sovereign gold bond is wrong. If I buy 1 unit of sovereign gold bond, which is equivalent to 1 gram, okay, if I buy 1 quantity and let us say I sell it after 8 years, which is the maturity period. Okay, one more important point, maturity period is what? 8 years. Of course, you have an exit option at the end of 5 years. So let me repeat again, one more time. I bought 1 unit of SGB, which is equivalent to 1 gram of gold. For how long do I have to hold it? I have to hold it for 8 years. Okay. Do I have an exit option at the end of 5th year? Yes. Okay. If I sell it after 8 years, whatever capital gain I get, okay, assume that I bought it at 4627 and I sell it off at 6627. That is 2000 rupees capital gain. Am I going to pay tax on that? No, 0 rupees tax. This capital gain is completely exempt if you're holding this bond till maturity. Hope this is clear, right? But then if someone is in need of money and if someone wants to sell it off before 5 years, is there any exit option? Answer is yes. These gold bonds are going to be tradable on the stock exchange. So let us say this will be tradable on National Stock Exchange. So can you sell it off on the stock exchange? Yes, why not? Now question is that if you sell it there, and if you have a capital gain, will that be taxable? Answer is yes. Okay. What will be the taxation for that? Very simple. If you're talking about a short-term capital gain, then short-term capital gain will be as per your own tax bracket, right? If it's a long-term capital gain, then that will also have something known as an indexation benefit. Okay. So this is, I hope, in simple, you have understood the capital gain structure. Let me just quickly wrap it up for you one more time. Okay. You invest in sovereign gold bonds. Okay. You're going to get 2 types of returns. Which 2 types of returns? Interest and capital gains. Interest, how much? 2.5% on an annual basis. Is that going to be taxable? Yes. Simple. Capital gains. Is that going to be taxable? 2 possibilities. Yes, no. When is no? No. Possibility number 1, if you sell it after 8 years. Okay. That's no capital gain. But if you sell it on the stock exchange, where I'm talking about that yes category, if you're selling it on the secondary market, then yes, whatever gain you will get, that will be taxable. Well, actually, couple of points can be added here. Number 1 is about TDS. Okay. Generally, whenever you keep your money in fixed deposits in banks, then banks would deduct tax at source on your interest amount. Okay. Is that going to happen with SGB? Answer is no. Okay. So no TDS on interest on SGBs. But does this mean it is tax free? Answer is no. You will have to pay that tax on the interest portion whenever your tax is payable. Okay, that depends on whether you're individual or corporate or whatever. Okay, so whenever tax becomes payable, you'll have to pay tax on that, right? But no TDS, very important. And number 2, I did talk about the fact that yes, these gold bonds will be tradable on the stock exchange. Question is when that date is going to be notified by RBI. So once RBI notifies this date, from that date, these bonds will start trading on the stock exchanges. I hope this part of gains and its taxation, this part is absolutely clear. So now let's move on to the next point, which is again very important. That is, how much is the minimum amount which is required for investment? I'm happy that the minimum lot size, which we can say, is just 1 gram. So you require only an amount of 4,627 rupees to invest in an SGB. I think it is way too cheaper as compared to IPOs, where the lot size, one lot size amount will be somewhere around 14,000-15,000. So it's a great thing that even small investors can easily participate in this. So minimum amount of grams that you can invest is 1, and in multiples of 1. But maximum amount for individuals and HUFs is 4 kgs per year. So can you go on investing 4 kgs every year? Yes, you can. Okay, but if I'm not talking about individual or trust, if I'm not talking about individuals or HUF, but if I'm talking about trusts, charitable institutions, some similar other institutions, okay, then for them minimum is 1 gram only, but maximum is 4 grams, or instead of 4 kgs, it is 20 kgs per year. Okay, so let's understand one more time. Individual HUF, trust, any other charitable institution, whatever, minimum is 1 gram. Okay, but maximum for individual or HUF, it is 4 kgs, but for other institutions like trusts, as I mentioned, for them it is 20 kgs and per year limit. I hope the minimum and maximum limits are also absolutely clear. Now the next question, is this my only opportunity to invest in SGB? Answer is no. Okay, this is the third tranche. This is the third series in which SGBs have been issued. Okay, in 2020-21 itself, the first series, you can check it out on the screen. First series was issued in April, second in May, third one, which I'm talking about right now, is being issued from 8th June to 12th of June. Okay, very important. So this is currently available for investment. Tranche 3, series 3, 8 June to 12 June. 12th June, 3:30 p.m. is the cutoff. Okay, so that's very important. 3:30 p.m. 12 June is cutoff. July, August, and also one towards the end of the August till September. But why talk about upcoming issues? Let's discuss about this one only. So 8 June to 12 June is the time frame within which you can invest in SGBs. Question is, can I apply for this even offline? Answer is yes, you can do that, but you will have to hold a physical certificate. You will have to secure this. I mean, you'll have to keep this physical certificate, which you will get very safely with you. You'll have to ensure that doesn't get misplaced, because you also have to redeem it. But why do all this stuff? You can obviously buy gold bonds online, and if you're buying it online, as I mentioned, you're going to get a 50 rupees additional discount, not given by me, that's given on behalf of the government. Okay, so I request those who are going to apply for SGBs, try to buy it online itself. Okay, just in case if you don't have a demat account, I have given the link in the description box. You can check the link in the description box. You can open an account. Zerodha in fact opens a demat account within 24 hours also. So right after watching the video, if you're wanting to open a demat account, you can go ahead with it, and still you will have a fair enough chance of applying in this SGB series 3. Now that I've told you that you can easily apply for a gold bond, I'll also quickly show you how to apply for this SGB through Zerodha. Okay, what you have to do is just go to zerodha.com/gold. Okay, go to login with Kite, enter your password, PIN, and here it says that the issue price is 4627 per gram. Okay, so one quantity is basically the lot size. As I mentioned, it's way too small. It's just 1 gram is the lot size. So assume I want to place an order for, let us say, 2 grams. Okay, I hit place order, and it immediately says that your order has been accepted. Okay, your order will be placed at NSE or BSE at the end of the subscription period. And units, very important, is that units will be credited to your demat account. We have to ensure that we have sufficient balance in the account as well. If I want, I can also edit it. Immediately it says your order has been deleted, please click here to order again. Okay, so if I want to place an order for 10, let us say, okay, and if I say place order, again it says order has been accepted, right? So it's so very easy to place an order through Zerodha. I hope you have understood it very well. Well, I hope you have enjoyed this discussion on sovereign gold bonds. But before I sign off, I'm going to give you 2 homeworks. And when I'm going to discuss the answer of these 2 homework questions, I'm going to discuss this tomorrow, Thursday at 8 p.m. Every Monday, every Thursday, I come up with Q&A or the answers to questions which are asked by you in the comment section. Okay, so I have discussed a lot of questions which came up in my mind. I've discussed all these questions in this video itself, but still, if you have more questions, please feel free to ask me the questions in the comment section given below. Okay, now quickly take down your 2 homeworks, open your notebook, write down these 2 questions. The very first question is, can I get a loan against this SGB by keeping this SGB as a collateral? Okay, so like if you want to buy, if you want a loan, you have something like a gold loan, right? You might be aware about Muthoot Finance or Manappuram Finance, who are very famous for giving gold loans. Similarly, instead of giving physical gold as a security and getting loan, can I give these gold bonds and get a loan? That is my first question for homework for you all. And the second question is, whenever I buy gold in the physical format, I do have to pay GST. Question is, for gold bonds, will I have to pay GST? Okay, so these are your 2 questions for your homework. Guys, I hope you are enjoying my content. If you are enjoying it, don't forget to subscribe to my channel. You can see a join button also right there. Consider subscribing to my memberships as well. Please, if you are, again, as I mentioned, if you are feeling that this content is worth it, you can also share my content on your WhatsApp or Facebook handles as well. Okay, so that's it from my side, guys. Jai Hind and